Today, I will be debunking the Metaplanet bears using their own math. I can't really say that because I don't think the Metaplanet bears can do math, but if they could, this is the math they would use. As always, this is not financial advice. These are my calculations, my graphs, my thoughts. Let's get started with some bear math if bears could do math. I have graphed out the Bitcoin per 10,000 shares for every single time that Metaplanet has ever bought Bitcoin. The x-axis shows the days since Metaplanet's Bitcoin adoption, and the y-axis shows the Bitcoin per 10,000 shares. So right now it's a little bit past 500 days since Metaplanet has adopted Bitcoin, and the Bitcoin per 10,000 shares is a little bit over zero point 0.2. Essentially meaning that if you owned 10,000 shares of Metaplanet, you have direct exposure to a little over zero point 0.2 Bitcoin. So if Metaplanet's valuation fell to being exactly equal to the amount of Bitcoin that they hold, you would have essentially a little over zero point 0.2 Bitcoin from direct exposure to Metaplanet. Now we can see from the beginning, Metaplanet grew exponentially in their Bitcoin per 10,000 shares or Bitcoin per share. Then pretty recently, it dropped off a bit and kind of staggered out. So what happened? Metaplanet was trading at a pretty decent mNAV throughout their time since adopting Bitcoin, and trading at a high mNAV allowed them to dilute shareholders very efficiently and being able to buy Bitcoin without selling too many shares. Because when they're trading at a high mNAV or a high premium, they're essentially able to sell their shares for a very high valuation relative to the amount of Bitcoin that they hold, making it very efficient when they are going off to sell shares. However, pretty recently, their mNAV has really compressed almost all the way down to a 1, where the market's only values them at about where their actual Bitcoin is being worth. So since that mNAV has gotten very compressed, their cost efficiency has decreased a little bit, causing this stagnation. Because of that, when they go to sell shares, they're not able to do so quite as cost effectively, and therefore they have to dilute a little bit more shares to be able to get a little bit less Bitcoin. However, that is okay because they are still growing in their Bitcoin per share, and even if they just continue with this less effective rate in growth of Bitcoin per share, it is still looking extremely bullish, even though the bears say that it's bearish. And we will get into exactly why that is. To start out, we will get into just a few key pieces of data that we need to know for some calculations we'll get into. Right now, Metaplanet's mNAV is trading at 1.66. So essentially, their market cap is 1.66 times higher than the value of their Bitcoin holdings. And Metaplanet currently holds 20,000 Bitcoin. Now let's calculate the Bitcoin per share cover during this period that the bears are drooling over, which I call the inefficient period. Now, for reference, the inefficient period that I'm referencing to is going to start when Metaplanet had 15,555 Bitcoin, which was right over here on the Bitcoin per 10,000 shares graph. That's when we really saw that exponential slope really just kind of drop off and then start to stagnate out. So this period over here, from when Metaplanet had 15,555 Bitcoin to now 20,000 Bitcoin, is what I am referring to as this inefficient period. And now for the Bitcoin per share cover, I am trying to calculate how long it will take for the Bitcoin per share to essentially be covered from the premium that Metaplanet is trading at. So since Metaplanet is trading at a 1.66 mNAV, we essentially want to get the current Bitcoin per share 1.66 times greater to cover that mNAV. So Metaplanet currently holds 20,000 Bitcoin. At this point, they have about 0.21 Bitcoin per 10,000 shares. Back at the start of the inefficient period, they had 15,555 Bitcoin, which was about 0.186 Bitcoin per 10,000 shares. So now to calculate the essentially cover that we need for the Bitcoin per shares, we will just take the current Bitcoin per share that we currently have and we'll multiply it by the mNAV or the multiple in a Metaplanet's net asset value, and we would get 0.35 Bitcoin per 10,000 shares. So if Metaplanet can get to 0.35 Bitcoin per 10,000 shares, it has essentially justified the current mNAV. And after that point, as long as Metaplanet keeps doing its thing and as long as the mNAV stays above 1, you're essentially just getting free Bitcoin as Metaplanet just keeps rising their Bitcoin per share. We can then also use that to calculate the Bitcoin per share growth per day. We would just take the difference from the Bitcoin per share now, and we would subtract that from the Bitcoin per share at the start of the period when they had 0.186 Bitcoin per 10,000 shares at the start of this so-called inefficient period. We would divide that by the amount of days in this period, and we would get about 0.0045 Bitcoin per 10,000 shares per day. Now we can do this because this growth has been relatively linear. I have graphed it out right over here. The Bitcoin per 10,000 shares since the start of this so-called inefficient period. And this on the x-axis here is the days since Bitcoin adoption. This here is a linear graph. We can see the R squared value shows a pretty strong correlation with that linear graph there of 0.968. So I'd say we can just divide the difference in the Bitcoin per share from the end of the inefficient period, subtract it by the Bitcoin per share by the start of the inefficient period, divide it by the total days in that period. And because this was a linear relationship, we would be able to calculate the Bitcoin per share that way. And then from there, we would be able to use that number to calculate how many days it would take to essentially cover that Bitcoin per share. For this, we would just be taking we would take 0.1389 Bitcoin per 10,000 shares, which is essentially just the difference between this 0.35 Bitcoin per 10,000 shares, which is what we are aiming to get to be able to cover the Bitcoin per share. And we would subtract that by the 0.21 Bitcoin per share that it's currently at. And that's where I got the 0.1389 Bitcoin per 10,000 shares. We divide that by the growth of Bitcoin per 10,000 shares per day, which gets us to 308 days. I know that was kind of a lot, but essentially the main things to know are that to cover the Bitcoin per share, we need to get to 0.35 Bitcoin per 10,000 shares, and that would be projected to be 308 days from the last Bitcoin purchase of this inefficient period. Now let's conceptualize what we just calculated. We calculated that to cover the Bitcoin per share, we need to get to about 0.35 Bitcoin per 10,000 shares to essentially justify the premium. After you got to 0.35 Bitcoin per 10,000 shares, any more Bitcoin that Metaplanet accumulated, any more Bitcoin per share that it grew by, you would just be essentially getting free Bitcoin as long as the mNAV was staying above a 1, which logically should be the case. Now, Metaplanet currently has about 950 million fully diluted shares outstanding. So the Bitcoin balance that is needed to cover that Bitcoin per share, we would take that 950 million shares outstanding, multiply it by the 0.35 Bitcoin per 10,000 shares, and we would get 33,250 Bitcoin, but that's assuming that no additional shares are being diluted there. So we're going to also add that into as a factor here just by graphing it out. So I graphed out the amount of fully diluted shares outstanding since the start of this inefficient period. So right here was when Metaplanet had that 15,555 Bitcoin, and we saw their capital efficiency really start to decline from that point, and they had to dilute more shares while being able to buy less Bitcoin because their mNAV had compressed, and because their mNAV compressed, their capital efficiency declined. So this is the graph I have for that. And then from that, we get an equation up here that we'll use for the next calculation. So when we go to calculate the fully diluted shares that will get outstanding at the point that the Bitcoin per share would be covered, we must remember that the Bitcoin per share cover is, we're projecting it to happen in 308 days based on this inefficient period. So if Metaplanet just continuously buys Bitcoin and dilutes shares at the same rate that they have during this inefficient period, it would take about 308 days. We calculated that a little bit ago here, and then we would take the equation here to calculate how many fully diluted shares outstanding there would be at that point. So this was the equation we had on the graph. We're going to plug 819 days in for X over here. The reason we're plugging in 819 is because we're taking the 308 days that it would take to cover the Bitcoin per share, and then we're adding it to the last day since Metaplanet adopted Bitcoin. So if we go back to this chart here, the last day on this inefficient period was a little past 510 days. It was at 511 days. So we're going to add that 308 days that we calculated before. We're going to add that to the 511 days, and that's going to be able to project how many fully diluted shares outstanding we'll have 308 days after this last day that we have on the graph for this inefficiency period. So when we calculate that out, we get Y equaling to be 1.47 billion fully diluted shares outstanding. Now, what does this all mean? Well, essentially, in 308 days, based on the current rate of inefficiently diluting shareholders, Metaplanet will have covered the Bitcoin per share, and then anything beyond that would just essentially be free Bitcoin to the shareholders. So if you were to buy Metaplanet today, and Metaplanet just continued this rate of diluting shareholders and buying Bitcoin at this low mNAV where it hasn't been as nearly as efficient as it has in the past, they will still have covered the Bitcoin per share in 308 days, and then anything beyond that would just be free Bitcoin for the shareholder. And then at that mark, that 308-day mark, the projected fully diluted shares outstanding would be 1.47 billion shares outstanding. So then we could take that 1.47 billion shares outstanding, multiply it by that Bitcoin cover, and we would get a projected 51,450 Bitcoin that Metaplanet would hold. And again, this is assuming that Metaplanet just continues this stagnant growth where their mNAV is continuously compressed and they're not able to raise capital nearly as efficiently as they have been in the past. Now, even this scenario is extremely bearish because it's already assuming that Metaplanet's only able to buy Bitcoin and must dilute shareholders at the same rate with an overly compressed mNAV since it's already pretty close to a 1. And as their mNAV is continuously getting compressed while the company's Bitcoin net asset value continues to rise, it's eventually going to force mNAV back up, which is going to force the share price back up, allowing the company to buy Bitcoin faster and faster while being able to exponentially be less dilutive because they're able to buy more Bitcoin relative to the amount of shares that they're diluting. And the market's going to see that. Market sentiment will rise. mNAV will expand and the cycle will repeat itself. So even this bearish scenario is still very, very bullish. But again, I was just using numbers that the bears are using because they are saying that Metaplanet is being overly dilutive and not cost efficient. But even if the bears could do math, they would be bullish. My name is Angel Espy. If you like this video, please consider liking and subscribing to support my work and to support this channel.